This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
All right, everybody, we're going to stay with Netflix as we promised because we are seeing the stock move in the after hours.
10%, Carol.
Well, as Abigail?
Yeah, she did say that it tends to move significantly to the upside or the downside. This after the company posted a big beat when it comes to third quarter subscribers. The company also saying that it's, quote, very optimistic about the long run ads opportunity, which I know our next guest is going to be looking at very closely.
More subscribers and adding, upping some prices in some territories.
Hey,
that's a strong model.
All at a time when all at a time when the writers and actors strike has been happening, which Netflix makes a nod to. We should note that we're not seeing the effects of that when it comes to content yet, because that content, hasn't, it's been only 6 months. Exactly.
All right, so let's get to it with Dan Morgan, Senior Portfolio Manager at Synovus Trust. He's been going through the numbers just like we have in real time. He's on the phone in Atlanta. Dan, always good to have you here. Subscriptions, can we talk about that? Can we talk about boosting some prices? Is that the big deal?
Hi, Carol. Hi, Tim. Yeah, it looks like, as you mentioned before, a very strong number in regards to the third quarter actual versus estimates. The only thing I'm kind of scratching my head on is this guidance going into the fourth quarter.
What's puzzling to you?
Well, revenues, I think they came in at $8.69 billion. I had $8.77 billion, and they're pretty much in line or slightly below in terms of EPS. In terms of the guide for the upcoming fourth quarter.
Right.
So you're seeing the guide as too light given the subscriber gain?
A little bit. And you would expect guys, the estimate was what, 6.2 million, and they did 8.76 million on the third quarter. So you kind of wonder if you'd get some overflow going into the fourth quarter, we'd feel a little bit more confident in regards to your guide for revenues and EPS. Maybe this just is something management is doing to kind of set the stage for what could be potentially a large beat for the fourth quarter, because obviously the blue numbers, at least on EPS, on the third quarter.
That's a great point. Third quarter streaming paid net change up 8.76 million. The estimate was 6.2 million. So you're talking about 2.5 million more. And then they come out with a fourth quarter EPS of 2.15, 2 pennies shy of what the street was expecting.
So why the delta there?
Tim, it's kind of interesting because we know that the model for Netflix is really changing, right, guys? We used to think of them as a huge growth at all costs, right? Add as many subscribers as you can. Don't worry about the content costs. Just keep bringing on the subscribers. And that all kind of peaked out during the COVID period. And now things have changed because the growth drivers going forward for Netflix are really going to be about converting, shared password users into paid users, right? This new ad support model, which only has about 10 to 11 million subscribers. It's not a huge amount. You got to bear in mind they did, 247 million total paid members at the end of this quarter. So it's a very small portion. And then they're talking about after the actor strike, as you might mentioned before, that they may increase prices. So the whole model has really changed, right? And what that has led to is that average revenue per user is slowly falling. It's a little over $11.
That's interesting.
But I think, Tim, that may be one of the reasons why we saw such a huge jump in number of subscribers, such a huge beat in the third quarter, but then we're not seeing that really reflected in the guidance going into the fourth quarter in terms of sales and earnings per share.
Well, I should note another big headline crossing is that Netflix will boost some prices in the U.S., UK, and France. Here's what they said in their letter to investors. In the U.S., our ads and our standard plans, which are $6.99 and $15.49 respectively, will stay the same. Well, basic will now be $11.99 and premium, Carol, premium Netflix, $22.99 a month.
So that's real money.
That is real money. It's for years Netflix kept its prices the same, and now it feels like it's increasing prices frequently.
Dan, can they get away with it? Is that a big mover on the balance sheet, that premium?
I think so, Carol. I mean, just on this last quarter, they did 1.75 million in the U.S. That's one of their most wealthiest subscriber bases, right? They generate more average revenue per user from there. These are rather significant. I mean, when they rolled out basic with ads, almost a year ago or within the last 6 to 12 months, they're at $6.99 a month. Tim, you just mentioned they're going to $11.99 a month, and then a premium service at $22.99 a month. So, I hate to say it, I'm a Netflix subscriber. I don't pay attention as much as I should, probably, and they debit my account every month. And I think that's
just how they like it.
Banking on. Yeah, they're kind of banking like, okay, $5 to $10. Are people really going to leave over that amount? I'm sure there will be a portion that will, but I don't know about you guys, but I'm not watching it every month, and they'll probably end up getting away with it, at least in my account.
It's so
same
true.
with me.
It's so true of our world. I think about that with the Easy Pass or like tolls. Like, it's not until every once in a while I
Unfortunately, you
look
set
at
it
the
and
bill.
forget it. But the difference between this and other services, Carol, is Netflix is so easy to quit and so easy to subscribe to. From the beginning, they've wanted to make that seamless.
Yeah.
You can just call Netflix and pause your subscription so easily.
How often do folks do that, Dan? Do they pause their subscriptions?
We don't have any numbers that have come out or anything released directly by Netflix, but that's an interesting point. I know other services do that also. You could be not wanting to use it for a period of time because you're going to focus on some other things in your life opposed to watching all these different series and so forth, or maybe you're going to go out of the country. They don't really give us those statistics or numbers and what that impact is, but it would be interesting to see how many people actually do that.
All right, so Netflix shares up 9.4% in the aftermarket. We talked about the big jump in third quarter subscriber additions, way topping estimates, boosting some prices in the US, UK, and France. So what's top of mind on the analyst call for Netflix for you?
Well, obviously, another thing, Carol, that came out on this call was a huge jump in free cash flow, right? They had originally projected $5.2 billion. They now have upped that to $6.5 billion. You guys talked about the fact that, they are coming off the writer's strike, but we still have the actor's strike. And we know that content has been muted, right, in terms of cost because they haven't had full throttle in terms of their ability to create it. So I think one of the things people are going to focus on the conference call is, once this actor strike gives up and we can start to free up, what can we expect in terms of the amount of money they're going to be committing towards content? And, obviously this price increase has been looming out there. How will that impact going forward? So I think those are going to be some of the big issues, Carol and Tim, that are going to come up on the conference call.
I think a big question that I would have is, okay, Netflix has cracked down on password sharing. It certainly affected my universe. Let's just say that, and we'll leave it at that. How many of the people who can no longer log into their parents' Netflix account are buying their own?
That's a good question, Tim, because some of the things that have been coming out with this crackdown is that Netflix has been pretty liberal about moving forward with it, right? They haven't really, like you said, all of a sudden you go on and you're not on anymore, right? They're trying to coax these people to sign up and be legitimate payers. So that's a good point, and that is that, are they going to be a little bit more, tougher on these people and really just say, look, that's it. You've been doing this forever for free. We're going to cut you down and you're going to have to subscribe. So that's another interesting element to the growth story going forward, how quickly they kind of crack down on these people. So far, they've really been pretty lackadaisical about it. It hasn't been as nearly as strong as a lot of analysts would like to see.
Well, it'll be interesting, too, speaking of the growth story for Netflix. They're hosting their first live sports event in Las Vegas. That's on November 14th. So they, like everybody else, getting into the sports business increasingly and the live sports business as well. All right, Dan Morgan, you rock. Senior Portfolio Manager at Synovus Trust, with us on the phone from Atlanta. Netflix shares up 9%.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
All right, folks, a lot of earnings. We mentioned Netflix. It is soaring in the aftermarket. It's up more than 11%, a big beat in terms of subscribers for the current quarter. Yes.
The Tesla story, not so much.
No, I'm just looking at the stock right now. It is just up about 0.7%. So kind of a meh reaction, if you will. There's some concerns about the gross margin miss.
Yeah.
And there's, of course, the delivery slowing down.
It was a miss across the board for Netflix.
They did talk about the Cybertruck deliveries coming
Yeah, well,
November 30th. They're coming.
That's what they want us talking about. But let's go
Yay.
through some of these numbers because you highlighted a couple important ones. Gross margin coming in below estimates at 17.9%, so just shy of those estimates of 18%. Third quarter revenue, Carol, coming in at $23.4 billion versus estimates of $24.06 billion, so a miss there. And then also adjusted EPS, a miss there. Analysts want to see 74% according to the Bloomberg consensus, but Tesla reporting 66 cents.
Third quarter free cash flow, that was a big miss, $848 million versus an estimate of $2.59 billion. As we mentioned, stock little changed in the aftermarket, but it's been on quite a tear this year.
So one thing that's surprising to me, and I want to get to our next guest, we got Bloomberg News equity markets reporter Esha Day here in our Bloomberg Interactive Broker studio. We also got Bloomberg Intelligence senior autos analyst Kevin Tynan from Bloomberg Intelligence headquarters in Princeton, New Jersey. Esha, you cover the stock story of this, and I said this on air when we were with our TV team when these numbers crossed. Why don't we see the stock moving more after misses across the board?
Say the big reason that the margins missed is because of those price cuts, right? And the price cuts have been so widely telegraphed. Like, people knew that the margins are going to take a hit. Whenever I was talking to investors, mostly buy side here was coming in expecting that the margins are going to miss.
It was a slight miss, though, to be fair. Gross margin 17.9%.
But expectations were low.
And that's my point. They've already been reined in. The point is, everybody reined them in, and then it was still a miss.
It's still a miss, and it was still expected to be a miss by investors. So, I mean, I'm talking about this kind of a slight disconnect that was there between the buy side investors and sell side. That's one part of it. The stock also went down like 4.7% or 4.8% today, right? So some of that, we're seeing some of that coming back. There was a lot of fear about how the margins will do, and it seems like, okay, fine. It's like the big number is a 1-2% miss, but maybe people were expecting a much bigger hit. We must realize that even though prices were cut, battery raw material costs were also coming down, so no one really knew how much of a miss it would be, and seems like so far market thinks it's
I just
not
want to
that
understand
bad.
what you're saying. Even though prices were being, Tesla was cutting prices, the cost to produce the vehicles has gone down as a result of raw materials falling.
Yes, because battery raw material prices, and I'm sure Kevin can weigh in on this as well, were soaring last year, as we all know, and that has been absolutely falling off a cliff this year. So that's helped a bit, not fully, which is why we are seeing this kind of margin getting eroded. But I mean, that's a push and pull that investors are thinking about.
Yeah, it's interesting, like what ultimately moves this company. Margin's obviously so important, especially against the backdrop that it has been cutting prices. I was actually in an Uber that was a Tesla.
Was this in LA?
It was in LA.
Every car I took in LA was an EV.
But the guy who was driving it, who actually owns a trucking company, we had a whole long conversations about the dynamics, business dynamics and demand. That's what I do when I'm in an Uber. But he was fascinating. But he was making a sale for an Uber. He's like, haven't you seen with the price cuts? And then you get the credits. He's like, you can get their base model for something like $36,000 or $35,000. That actually, if you think about the general cost of,
Were you in a Model 3?
I guess it was at the base level.
Yeah, the base one.
Yeah, I mean, that's pretty affordable for a lot of Americans.
Absolutely, yeah. So, and that's something that people, point out to me whenever I'm talking to them, that, we are talking so much about the price cuts, but we were also making a lot of noise when Musk came out and said, we will make a $35,000 EV, which the Model 3 never really was. But now, with all the price cuts, we're getting real close to that number,
And
right?
I was doing the same thing when I was in LA, Carol, when we were in an Ubers together.
Uber Green.
Yeah, and I was having the same conversations. I talked to somebody who had actually bought a Tesla with 30,000 miles already on it. He drives it all day. He goes to a supercharger at night and charges it for an hour. And he says he just sits there and watches YouTube videos while it's charging. And he actually was really happy with the car and really happy with the self-driving features on the car, which was a little scary to me because he told me he could just drive without, driving.
It's interesting. I mean, I talk to investors for my coverage all the time, but I also do like these conversations and I hear the same.
Hey, listen, I want to bring in Kevin Tynan, who's sitting by patiently, Bloomberg Intelligence Senior Autos Analyst. Kevin, take it away. You see this report on Tesla stocks little higher in the aftermarket.
Yeah, look, and on gross margins, those are automaker gross margins, but you also have to remember there's regulatory credit sales. They also bring in deferred full self-driving revenue from the balance sheet there. So you really have to kind of go through line by line, and which is why I think you don't see the stock react immediately after the earnings release. It's probably more during the overnight and into tomorrow, where analysts have really had a chance to go through and decode some of the things that are in there.
Is there a headline that you are focusing on here as it comes across the Bloomberg? Of course, we always go to the red headlines, the sticky third quarter adjusted EPS, 66 versus 74 was expected. But there's so many moving parts when it comes to Tesla. Is there a headline that you right now, given more time, you might focus somewhere else, but that are focusing on right now?
And even, how they direct the eye to the gross margin, you got to remember too that they cut production by 49,000 units and outsold production by 4,500. Right, so you have 4,500 vehicles that were booked as revenue in this quarter, but the costs were in the previous quarter, right? So there's a little gross margin bump as well. But the thing to me is that would be concerning if I were a bull would be that, we hear all the time, right? Tesla has no competition, they dominate, they're embarrassing every other automaker, And then at the same time, now you have real demand concerns, right? So this isn't about competition or competitors coming out with really good products that are taking share from Tesla. This is still a company that has that market or that segment or that niche to itself, because other automakers can't be profitable there and don't want to do it. And now you still have demand concerns. So to me, that's what would concern me if I were bullish on this stock.
Hey, Kevin, yesterday we had a great chat about the demand issues when it came to the Ford F-150 Lightning. Headline here is that Tesla Cybertruck deliveries are scheduled to begin on November 30th. Is this a distraction? Should we care about this? I mean, is Tesla actually going to sell a lot of these things?
Well, so they miss a target, the 1.8
surprise.
Yeah, right. So, but look, I think this is one product that is probably more dangerous than any other. There was a lot of copy and paste from Model 3 to Model Y, and this is clean sheet in terms of production. So this launch is going to be way more expensive.
When you say dangerous, I think of getting hit by one of these. That's certainly dangerous. What are you talking about when you say dangerous?
In terms of absorbing the launch costs, right? Is that this is going to be expensive to produce, at least in the initial ramp. And if demand isn't what it appears to be, and I had published something on this last week that says, look, in that full-size pickup segment, including F-150 Lightning's less than 1% of that segment, and it has no competition, right? It's the only full-size pickup truck that's electric, and it's still less than 1% of what those buyers want. So to think that Cybertruck comes into the full-size pickup space and then takes market share, it's not going to come from those buyers. It might come from other Tesla buyers, but it's not going to be a Ford driver or a Chevrolet driver or even a Ram driver.
Kevin, really quickly, 25 seconds. EV sales, are they peaking? I thought we were hitting a tipping point where all of a sudden we were going to see more, just very quickly.
Yeah, that's my concern, is that there's really no competition. So have we been sold a bill of goods on the scope and scale of EV demand to this point where it's not all it's supposed to be? Maybe in China it is, but Europe and the U.S., there's still big questions.
All right, guys, listen, thank you so much. Really appreciate it. Bloomberg Intelligence Senior Autos Analyst Kevin Tynan will look for his research on this on the Bloomberg from BI headquarters in Princeton. And, of course, our Bloomberg News equity markets reporter, Esha Day, here in studio. Shares of Tesla now up about 1.3%, Tim.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Who doesn't love their mom?
Come on. Mom's the best.
Moms are the best. As a mom, I can say that.
Love my mom. I'm married to a mom.
Great moms.
Yeah, moms rule.
All right, well, and it'll make sense in a moment, because we wanted to talk a little bit about, finding a job right now in many ways, right, Tim? has never been easier. If you look at some of the data, unemployment is low. Most recent job openings and labor turnover survey, we're talking about JOLTS, show that there are some 9.6 million job vacancies. So we talk about a hot labor market, and those data points point to that.
Yeah, but whenever I talk about JOLTS, people push back on Twitter and they say, are you going to move, to Maine to work in a restaurant? Like, that's what they say to me. And I'm like, okay, fine. And that brings me to my next point, which is finding the right job for where you are in terms of life stages can actually prove to be a challenge. And maybe the right job at the moment is a freelance one that gives someone the flexibility of real work-life balance.
Anybody in media knows about freelance. We've all done it at some point in our life. Anyway, this is where, though, on a bigger, broader scale, the Mom Project comes in. It's an online talent marketplace that matches women, and in particular moms, with companies that, in the Mom Project's words, that are committed to designing and supporting a better workplace. So we knew we wanted to talk to the head of this organization. The group, by the way, counts Serena Williams as a strategic partner. Allison Robinson is the founder and CEO of the Mom Project, and she is here in our Bloomberg Interactive Broker studio. Welcome. You're no stranger to the Bloomberg world. I know you mentioned about talking with Scarlett Fu in the past and other members of the Bloomberg News team here. But for those in our audience in the Business Week world who might not be familiar, tell us a little bit more about what you guys are doing.
Yeah, so thank you first so much for having me back. It's great to be here. So at the Mom Project, we are all about unlocking economic opportunity for moms. As you mentioned, moms are amazing, and so it's really our honor to help her connect with opportunities that will really fulfill her personally and for her family.
Why something special for moms, and what kind of connecting are you guys doing?
Yeah, why moms? I mean, I think so. Previously to becoming an entrepreneur, I spent my career at P&G on the Pampers brand, and in that experience really spent so many time in households with moms and just saw their strength and their resilience. And I felt like it was, when it came to the job market, a really underserved segment. And when we talk about kind of the size of this, I mean, consider 86% of women in the U.S. will be moms by age 44. So as a company, kind of thinking about workforce strategy, if you're not thinking about moms, you're not thinking about, more the majority of women in the workforce. So we're really proud. We know that this was a really underserved market, and so have really built the Mom Project designed with the unique needs of mothers in mind.
When you had your child in 2015, did you use Pampers?
Of course I did. That was, no question.
I mean, after working at P&G.
Yes. And I still do. I have my third child end of 2021, and we are still
even though you don't work there anymore.
I'm still very brand
loyal.
Yeah,
it's funny. We're a Pampers family as well. And it's
Cruisers
like
or Swaddlers?
Pampers Pure.
Okay.
Yeah, the brand loyalty. The brand loyalty with this stuff is crazy. Whether you're talking about moms or dads, I mean,
diapers and wipes, man. You go one direction or the other.
Exactly.
Sometimes they're different brands or different companies.
Colgate.
I don't want to. Yeah.
Very divisive.
I mean, we're talking like classic CPG stuff right now. Like this is what they talk about for hours in Cincinnati.
Exactly. I'm from Cincinnati.
So help me here, because I have like a beef of when we start like dividing people into groups to help them, whether it's diversity at companies. Because at some point I think about the best thing about diversity is mixing and mingling.
So you're saying, Carol, like, what about the dads?
Like, what about...
Is that what you're saying?
What about the other partners? But I just tell us, like, what is it specifically that moms need in terms of tapping the workplace that maybe other individuals don't?
Yeah, absolutely. And I will mention we are an equal opportunity platform. So while so many moms identify, we're more broad than that. We really welcome anyone that identifies with our mission. We see time and time again what moms need is flexibility. They need respect. And those kind of head and shoulders above all else. So they're really coming to the Mom Project looking for companies that get it, where they don't have to have awkward conversations about maybe, picking their kids up from school at 3 and then plugging back in. And they love that by working with the Mom Project and the companies, they inherently kind of get that. And so that feels really good to our moms, and they feel seen. And certainly an emphasis on flexibility. We know that the workforce is changing rapidly. And so whether it's looking for remote work, part-time work, freelance, or to start your own thing,
interesting.
We're excited to really have kind of diverse opportunities that will meet her where she is and her needs for flexibility.
So talk to me a little bit about the platform, because since it is a marketplace platform, there's two sides that you're serving. One side is you're serving the moms, the other side is you're serving the companies. And if you go to the website, it talks about a big part of it is for employers, matching employers with the right candidates. Who are the companies that you signed up, and how do you convince them that this is the right way for their employees to work for them?
Yeah, so we have about 1.5 million moms, dads, and allies on the platform that we're connecting with, as you said, our customers. We've seen a lot of success both in large enterprise, so big blue chip brands who are coming to us to hire both project-based needs as well as full-time. And then we have a really healthy and growing segment of small businesses. So think of maybe a company that's got 5 employees just really getting started, coming to the platform. Maybe they need a part-time social media manager or a fractional CFO.
Allison, how much of it is part-time work, fractional work, project-based work?
Yeah, I would say it's
and how much is hybrid?
It's about 60% project-based, but it can be a great sort of foray into a bigger company. Maybe you start on a project, and then we see a lot of our moms love it there, and then they can convert into full-time employment. And often people think project-based work, gig work, which is something that we're excited to offer more of through Self-Made, but a lot of kind of the corporate project-based work tends to be kind of more 30 to 40-hour roles, 6-9 months, so longer term in nature.
Serena Williams, strategic partner, she has talked openly, right, about being a mom and then, being a professional player. It's not always easy, the struggles. I'm just curious, conversations you may have had with her or advice she has given in terms of how you guys approach what you're doing.
She's just so incredible. I mean, you think, as a founder, about people that sort of embody the values that you hope to bring into the world. And for us, she is that. She shows the strength of motherhood. I remember a conversation with her husband talking about when they found out she was expecting. Yeah. And kind of, was it at Wimbledon or the French Open, and just kind of that strength that it unlocked for her. And I just think that she is just such a beautiful example of what it can mean to take on a new act and, in investing and just being so authentic. I think moms are just, we all know that motherhood is really messy. It's really hard. And she's one of those real, very relatable examples.
Yeah, she's amazing. And he is always so supportive, on LinkedIn.
He's really good on talking about parental leave too, especially for dads.
He's a huge advocate of paid family leave, which is just something that is so critical.
Well, good to catch up with you. Good luck with everything. Allison Robinson, founder and CEO of The Mom Project, joining us here in our Interactive Broker studio. I'm Carol Massar, along with Tim Stenovec, and this is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
All right, everybody. We're going to talk a little bit about Jeep. We have been talking about it big time all day today, kind of tongue-in-cheek, because, it's interesting. This is, if you go back decades, a Jeep commercial on air would have said the toughest 4-letter word on wheels, meaning Jeep, right? Today, I feel like shoppers may have a different 4-letter word when checking out the price of a Jeep.
I think that's fair to say. I mean, Carol, you've heard the phrase, it's a Jeep thing, right?
Yeah.
It's like this understanding that Jeep owners have amongst themselves. I've never had a Jeep, so I'm not really in on it, but...
You've driven in a Jeep, though, right?
Yeah, it's fun.
It's so much fun.
Go to the beach.
Take everything off, everything's open.
Well, it turns out those Jeeps are getting pretty expensive these days. Up to $100,000 for a Jeep.
Unbelievable.
But it's key.
Why?
To a strategy.
Why?
Think about what we've seen from Stellantis. It's the parent company of Jeep. It is one of the big three. It's actually turned itself into the most profitable big three automaker in Detroit after being an underdog for years.
But you do wonder about these higher prices and what it means for Jeep's loyal customer base here in the United States. So let's get to it, because right in our studio, our Bloomberg Interactive Broker studio, is Jim Ellis.
I was wondering why Jim was here.
This is why I'm
Jim,
here.
you're sitting so patiently, not
saying
saying anything. I'm like, Jim is right here.
Anybody can walk in.
We love Jim.
We do love Jim. So Jim, tell us how this story came to be, because I think it really says a lot, because we talk so much about how expensive cars have got in the United States. But tell us about kind of the germination of this story on your end.
Well, it's one of those things that we've been talking about the affordability issue for a while now. That cars continually go up despite the pandemic, despite the fact that a lot of people seem to be worried about employment, and despite interest rates, which have made financing cars much more expensive than even just a year ago. And so I would have thought that means that anybody who's out there, sort of hawking vehicles was having a hard time doing anything with pricing. And it turns out, in talking to one of our reporters in Detroit, Gabby Coppola, that's not the case. That actually, Jeep has been extremely aggressive at raising prices, and that's been great news for Stellantis, which used to be, as you said, a sort of an also-ran. It's the parent of what used to be Chrysler, and it's part of Fiat Chrysler, and sort of people thought forever that they were sort of behind the guys like GM and Ford, and instead now they are a profit leader, and they have basically done what I wouldn't have thought was possible, which was to basically raise prices, and people still want you so much more that they're willing to pay not only higher prices, but prices that are going up faster than the overall already supercharged auto market.
So you mentioned Gabby Coppola, and she is with us. She is auto reporter at Bloomberg News. She's there with us in our Detroit bureau. Gabby, come on in on your story. I can't tell you how much we've all been talking about it throughout the day because we're like, what, $100,000 for a Jeep? Help me. Build on what Jim has been saying about this story that you wrote.
Yeah, well, I think to me, the interesting thing about Jeep as a brand is that it's always been like this incredibly coveted thing in the auto industry because people love their Jeeps. The only other thing you can compare it to in terms of a brand, like a transportation brand that has a real authentic community around it would be like Harley Davidson or something.
Interesting.
So like that's always been this great thing. But the question is, well, how do you milk that? How do you make more money off that? And Jeep decided to say, honestly, all of Detroit did, let's get out of these like low margin commodity cars. Let's focus on, the most profitable trucks and SUVs. And Jeep, they've added to their lineup to do that. They added the Gladiator, which is like a Jeep truck, like a mid-sized truck. And then they did this sort of extension of the brand, which was they brought back the Wagoneer, which is a nameplate people identify with from the past. It's got a lot of nostalgia, but they made it this super luxury, car that starts out, just under $100,000.
That is like mind-blowing. But you write in your story that overall unit sales for the Jeep brand fell 4% in the third quarter, the 9th consecutive quarterly decline. This coming from the company reporting out numbers earlier this month. That can't be good. That's not a good trend line.
That is not a good trend line. And, Jeep will say that they're starting to turn it around and that they're sensitive to this. And, they're also a brand in transition because it is true they discontinued the Cherokee, which is kind of like that's the biggest segment, that size SUV, and they basically have a big hole right there. So sure, there's some temporary things, but I'm not so sure it's just temporary. The most interesting conversation I had reporting the story was with this guy Alexander Edwards, who's like a brand researcher, and he said the most fascinating things to me about Jeep. When you look at car companies or really any brand, you're thinking about what is that company doing to build equity in that brand. He gave the example of, say, Hyundai has like this warranty, 10-year, whatever it is. We are so confident in our quality. If you buy our car, we're going to deliver that quality to you. Yeah. Wrangler brings authenticity, great capability, handling, all that kind of stuff. But he feels like they've been kind of resting on their laurels a bit. And I think that is why you see them, their sales suffering more than others in the industry, because everybody's raised their prices, right? We had the chip shortage of the pandemic, but why is the Jeep brand suffering? And there's some interesting kind of psychology, brand dynamics going there. That's just really interesting from like a corporate strategy aspect and like a brand strategy aspect. So,
but Gabby, is that the in the end, is that the price one has to pay to get higher earnings? Is basically to say maybe I'm not going to think as much about maintaining my volumes and instead, raise prices while I can and basically just work about margins, which makes Wall Street happy, but might not be the best thing longer term for a brand. Which
is so interesting on a moment where we're talking so much about Tesla margins after they report. It's obviously something we all focus on. Mm-hmm. Come on in, Gabby.
Yes.
Yeah.
No, that's a great point, Carol. Like Tesla is kind of doing the opposite. They're saying we're going to go. The auto industry, I've talked to a former Chrysler executive who said this funny thing to me. He said, he said, market share is vanity, profitability is sanity. So this is like the choice that every auto executive, every car company has to make. Do you go for volume or do you go for profits? And it's kind of like a dial you have to adjust to keep a healthy brand and a healthy company. And I think Jeep has gone very far into the profitability dial. I seriously, in reporting the story, was like, guys, is this the plan? Like, is this on purpose? And they're like, no. Like, they don't like. Obviously, they don't like what's happening, and they want to bring it back.
Yeah, nobody
so I
likes
think
a,
a lot of that.
nobody likes a lower,
Yeah.
a downward moving trend line. Come on, like get real.
Right.
So-
yeah, you can't say, "Oh yeah, we don't care." Like you can't say that. Yeah.
I mean, Gabby, I have to say I love this story because I was pretty shocked a little over a year ago when I saw the Grand Wagoneer. And, you know, it's funny because my grandparents had one of these Wagoneers back in the day. And, like, I have memories of when I was a kid being in this wood-paneled, like, 1980s Wagoneer. I mean, it looks nothing like the Grand Wagoneer today. When you approach $91,000 as the base price and get up, you know, easily over $100,000 when you do add-ons, what's the competition on an SUV basis that starts to come in that could pull away potential buyers?
Well, so that segment, you know, it's not like Jeep invented this idea. Okay, like look at the Cadillac Escalade. That, you know, Ford or has the Lincoln brand, the Lincoln Navigator. They're going up against like a Mercedes G-Wagon.
Wow.
You know, these are. So it's really like Jeep was, you know, the company was trying to get in on some of that. They're late to the party. They have, you know, the merger happened. They have more resources. They wanted to say, why are we leaving this money on the table? Let's do this. The question is, they put it under the Jeep brand because that is their most popular, right? That was kind of the easy way to go. The point that Alexander Edwards made was that the right place to put a vehicle like that? Because it has to live in the same tent with the Wrangler, with the people who are all about authenticity, all about realness, all about, you know, get out there in the woods or on an off-road trail and, you know, screw your boss and your crappy job. You go out there with your Wrangler. Like,
You know, it's a Jeep
that is
thing.
what-
It's a Jeep thing.
Yeah, it's a Jeep thing. I mean, I was going through like social media looking at like Reddit threads of communities around Jeep, and the community is very strong. People put these little rubber ducks on their cars. You see, even in Detroit, I see people at Jeep will have a bunch of rubber ducks on the. It's like this kindness. It's this community. It's like we're all the same tribe kind of thing. Again, it's like a group of Harley, and it transcends class. Right? Like, I think it's the same with Harley Davidson.
One of the
People
things that
getting
really
around
surprised. Oh,
Gabby, Stellantis is calling, and they'd like you to write their next commercial for Jeep because that was like priceless. Anyway, Jim, go ahead.
Gabby, one of the things that I found really interesting in your story was that even though, you know, Jeep is trying to sort of deal with this issue by coming out with some lower priced offerings, the starting price, the price that we all see on websites and whatever, is not what people pay for a Wrangler, for example. I mean, there are it's sort of like a Chinese menu. There's so many add-ons here that really make these cars very expensive.
That's exactly right. So when they say, "Oh, but we have an entry-level two-door ragtop Wrangler for only $32,000," you know, that is very, very basic. And the stuff you're gonna, I mean, Jim and I were going through some of these options last night, and we were putting the story together. You know, oh, okay, you want to have a color other than white on your Wrangler? Okay, that's another, you know, $600. You know, the stuff, you know. And it's fine. The Wrangler is a toy. It's a big toy for people, right? And so that's fine. It makes sense. But I don't know. I mean,
How do you go from 32,000 to 100,000 though?
Different cars.
You just don't know. Different cars. Different cars.
But it's still the idea that you know, you can make a car only in white for the base price, and that to have any color other than that, that's an extra $500.
Nobody buys a white car anymore.
But
All my dad buys are white cars.
Well, sorry,
Ever. Maybe it's because they're
He's
the
the
base
odd one.
price. He doesn't do the add-ons.
No, but it's a good point, right?
it's the add-ons it's as you mentioned earlier, the customization, which really, you know, sort of connects with a brand like this. You know, it sort of works well from a profit standpoint simply because there are millions of things you can add on here, and all of a sudden you're paying, you know, like 40% more than the list price of the car or the base price of the car.
Yeah. That's all good when interest rates are, 2-3%. You can finance it. That's the American way, right? Give me more debt. I want what I want now. But when interest rates are this high, people just can't do it, And I think that has implications for the brand.
Now, they've got competition now, though. I mean, obviously there's always competition in cars, but also in that sort of rough and ready kind of segment, they've got a couple of new good competitors, right?
Yes, the Ford Bronco is serious competition for the Jeep Wrangler. For the longest time, there was nothing else like the Wrangler. They had the whole segment to themselves. That is not the case anymore. Ford brought back the Bronco, and it has been a big success. I mean, I don't know
it's
if
pretty
it's
cool,
Detroit, but I see them all over the place.
I do too.
The styling is great. You know, they're cute. They got, I mean, the colors are awesome. I mean, I'm
not just white.
Yeah, I'm sure you have, but look, the Bronco is I don't have the exact price thing in front of me, but the Bronco is like roughly same prices. So that's not a question of, they're doing it too. But the question is, what are you giving people for that price? What is that styling? What is the capability? What are all the cool little innovative things and ideas you put in there? How's the quality? I don't know. Those are all questions you have
But
to
with
ask.
these heavy prices, does that also start to sort of open up the door for traditional, so traditional Jeep buyers to sort of look down? In other words, is that why we're seeing, people coming up, or brands coming up on the list that you wouldn't expect, like Honda, as something that Jeep buyers are now
kind of going
looking
elsewhere,
at,
right?
the way that at least Edmund says that they're now coming into the radar of those traditional Jeep buyers.
Yeah, no, I mean, I'm telling you, I posted the story on Reddit today, and the Jeep community is aflame.
What are they saying?
What do they say? Yeah, what do
They're
they
like,
say?
yeah, well, there's a lot of nostalgia and a lot of I love my Wrangler, but there's also a lot of, man, I'm so happy I bought mine back in 2016 because I couldn't afford it today. There's a lot of that. Or I had an accident, I need to get a new car, but with interest rates like this, I can't buy a Wrangler. I mean, that's, and people, some guy was talking about, I guess I'm just going to get a Toyota Tacoma, pickup truck because they can't afford the Jeep anymore.
It's like down
Tacomas
payment
are
on
cool.
down payment on a house or buy a car. Like, what
This
do
is
I
it.
do? Or pay
Where-
for college education? Buy a car. Like,
Carol,
what
where are
do
you going
do?
to find a house where a down payment is the price of a Jeep?
Okay,
I'm sorry.
my dream, Tim
I'm sorry.
Stenovec. I will say Stellantis shares are up almost 40%. So, they definitely have caught the attention of investors. Gabby, this was so much fun, and I truly mean it. We have all been all over this story from the beginning this morning to today and then some, because it's just fascinating.
It's a Jeep thing, Carol.
It's a Jeep thing.
Thank you.
We really
It is a
appreciate it.
Jeep.
Gabby Coppola, she's Bloomberg News auto reporter. Jim Ellis, assistant managing editor of Bloomberg Businessweek. You had some fun with this story, huh?
This is fun.
Oh,
This is
really?
good.
Are you the cars guy?
I am not the cars guy. I'm the cars wannabe guy.
Okay,
I'm the
'cause,
wannabe cars.
you came in when you had that great BYD story
This
about
is
the
it,
EVs.
That's right.
It's like I can
Well-
just sort of look from afar at cars, wishing.
You're a mass
You are.
transportation
I'm going to
guy,
go
guy?
ahead and call you the car guy for
Okay,
VW.
good.
We love it when you join us, Jim Ellis.
We do love it when Jim joins us. All right, check this out. This story in the upcoming new issue of Bloomberg Businessweek, already online and already on the Bloomberg. Don't go anywhere. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, just got about 18 minutes left in today's trading session. As you've heard, and Tim and I have been talking with the gang here at Bloomberg. We've got stocks near their lows of the session. Denise, of course, just breaking down those numbers as well. And yields holding on to some of those higher levels. Again, a spike up, although we're off some of our highs. But nonetheless, you've got a 2-year at 5.2 and a 10-year at almost 4.9. So again, we're seeing, as we talked about with Abigail, again,
So
everything
continued
around
march higher
5%.
for yields, right?
Yeah, and kind of almost a flattening, right, in terms of everything at 5% or more. So it's interesting. All right, so let's see what Dana DeOria has to say. She's co-CIO of the publicly held InvestNet. They provide platforms to the financial investing industry. Those outside financial firms have roughly $384.8 billion in assets under management. Dana with us on Zoom in Pennsylvania. Hey, Dana, nice to have you here with us. A wacky market. We talk about the volatility when it comes to yields. A lot of movement, especially on that side of things. Remind us, first of all, so that our audience understands your clients and who is using your platform and how that platform gives you some insight in terms of market trends and investing trends or concerns.
Yeah, absolutely. Thanks for having me. So the InvestNet platform really powers advisory clients, so the independent broker-dealer space as well as RIAs. So, think of retail clients who are investors working with an advisor. We have about 107,000 advisors working on our platform. So, many hundreds of thousands of clients as kind of working with us. And we work with hundreds of asset managers. So, our platform has a nice junction between, the advisories business, the asset managers, research, et cetera.
And based on a platform that really taps into a wide swath of the financial sector, what insight are you getting about concerns, trends, strategies at this point?
Yeah, I would say, there's definitely question, that has come back up, and I frankly try to quell it a bit, but, bonds are suffering again, and, the notion that what happened to the negative correlation between stocks and bonds.
What happened to it? What did happen to everyone wants to know.
Exactly.
It's certainly the 60-40. I mean, it's so ubiquitous. Everybody talks about it. It is a pretty standard operating procedure, though, for a lot of folks in this industry, and for good reason, right? It's powered a lot of people to a great retirement. And I think, to the extent that bonds are suffering, I don't know that you can expect necessarily equities are hedging that. Hopefully the other way works out a little bit more. But what I do try to stress, and I think a lot of advisors do appreciate, is that we're getting income off the 40% now that we weren't for a long time. So we're in a little bit of a different environment here, right? It would be one thing if they were both falling at the same time, but bonds are not returning any kind of income, no yield. We're past that, right? We're getting yield on bonds.
How long are we how long do you think we'll be getting yield on bonds?
Even if we pivot, it's not, the usual plateau for the Fed is maybe 6 to 8 months, right, between when they finish a tightening cycle and when, they pivot to loosening. They're already telling us that, it's higher for longer. And I think we have decent reason to believe that unless something dramatic happens, that's probably going to be the case, right? We keep seeing more evidence that they're going to want to keep that hold on inflation, not so much maybe by doing another rate hike, but by keeping rates in restrictive territory. So
yeah.
My anticipation is you're going to keep getting income for a while, and even when they pivot, it's not back to where it was.
Dana, just got 30 seconds left here. Your business, if it's busy, maybe that's a good sign for the financial industry and a good sign for the overall economy. Are you guys busier than normal or what? And again, just got about 25 seconds.
I would say it's business as usual, right? People are still doing everything they need to do for their financial accounts coming in, people retiring, all the things that go on. And, definitely interest in markets and kind of a interest in not missing out on what could be continued good market activity.
All right. Appreciate some time with you. Glad we could connect. Dana D'Auria, she's co-CIO of the company InvestNet. And as we mentioned, they really provide platforms to the financial industry, the investing industry, firms that have almost $385 billion in assets under management on Zoom in Pennsylvania.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.